Good morning, good afternoon, and good evening to you all, the TSP Nation. I'm Rustin Edwards, based in Geneva, with my illustrious co-host, Matt Stanley in Dubai, and a hearty happy Halloween.
Whoa. It's so
No,
creepy.
button that back up again.
Happy. It's a stupid. I mean, I should. My kids asked me to. Oh, come on, Dad, get involved. Halloween, come on, it's fun. It's not though, is it? It's just annoying and means extra toothbrushing.
I'm looking forward to the 6 o'clock rounds with the kids, because apparently I've got duty with a bunch of kids, not just on my own. So we usually end up with a group of like 15 doing the rounds here in the neighborhood.
Gosh, well, good luck. Anyway, happy Halloween, everyone. Yeah, weather's getting nice. That time of year, everyone wants to be in the Middle East.
Well, the weather's autumnal here in Europe. We've got nice cooling temperatures. You got snow in the mountains, so all those skiers are getting their skis out of storage, getting them ready for hit the slopes after the holiday weeks coming up here. Big thing about Halloween, though, is candy inflation. That seems to be the big story. Candy prices up 14-15% year on year, mainly due to cocoa and sugar prices being up.
All right.
Yeah, it's one of those phenomenon that's going to take you a lot more to get your a lot more expense to get your sweet tooth on this year.
Okay, well, they're bad for you anyway. I did read yesterday there was a big fire at a big sugar export facility, and my first thought was, God, I bet that smells delicious. that was my only thought. I bet that smells amazing.
Yeah, as it turns to molasses, you're like, pancakes.
Yeah, candy. Oh, yeah, exactly. Candy, not candy, it's sweets. Anyway, happy Halloween.
Here we are sitting, though. We got crude markets lower. We got 88.12 on the day, up 67 cents on the day, but so far down on the week, which I got to say, crude markets have been basically following as we said they should. We've got rallies on Friday and sell-offs on Monday and Tuesdays.
Yeah, I mean, end of the month is pretty linear across the energy complex, really. It's on the oil barrel. Everything's down about between 8 and 9%, and that's it's unfortunately what we've seen this month again, and we touched on it last time, was what's happening from a geopolitical point of view, where tensions are in the Middle East between Israel and Hamas. Yeah, look, I mean, tragic, and it's we're not dismissing it whatsoever, but the impact on supply was negligible. We made that clear, but it was what potentially might happen, with supply disruptions, with other parts of the region getting involved, what it meant for the Suez, all considerations that the market had and decided to translate that compounded into, okay, well, prices went up to what, $95 a barrel, I think, that we've seen in October at the high, and now we're back down to 88. So I don't know. Yeah, look, back to where we were.
And I think your highest risk point is probably going to be in Saudi Arabia, because that's where the Saudi military has gone on alert with the Yemenis, Houthis launching rockets and drones to the north. I think there's a bit of a fear that you get some type of collateral damage impacting oil infrastructure. And that's probably your biggest risk factor at the moment, in my opinion, is something hitting something in Saudi, not by accident or by accident because it gets shot down and it happens to fall in the wrong location.
Yeah, look, I think if you're going to sort of summarize it to the point, and it's like I said, it's tragic. I think 8,000 people have died since the start of the conflict, this particular part of it, in Gaza alone. So it's tragic. But what I would say is, looking at it from because I'm not a politician, shock, nor will I ever be one. But I think that the situation has been remarkably calm. People have, in terms of people's reaction so far, it's been like just everyone, let's see what we can do and trying to pacify the situation best. And I think that's been reflected in oil prices, is that perhaps the more dramatic side of it, the potential upside to oil prices owing to a wider conflict in the region, have not materialized. And the threat of it day by day that passes is less and less. I think that's a somewhat ignorant view, though. I think that's fairly complacent, because like you said, it can switch straight away, on one big headline, and one just, the Houthi rebels backed, whoever they're backed by, it's all speculation, etc. The situation becomes that much more dramatic, and that gets reflected in volatility in energy markets. So Yeah.
And it has put the world on edge around the world. I mean, so you do have a lot more alerts being put out by different governments about try to keep your eyes open, avoid certain things, going to a higher threat level. That seems to be the continuing, at least the stories across Europe here. We'll see how things carry out. But yeah, I agree with you right now. Leveler heads have prevailed. A lot of saber rattling, a lot of rhetoric, but no action.
Yeah, look, the narrative though coming from Israel is still aggressive. It's very much okay. Action hasn't been as aggressive as, like I said, has been feared, but the narrative is still very much there. And politics, that we're at the barrel, we don't want to get involved in it. There are other people I'm seeing on social media platforms that I think is particularly not helpful, shall we say, to the overall, objective of a calmer environment within the Middle East. But look, it would be wrong to sort of say that it hasn't had an effect here. Where we are is a very safe place, and the government have got measures in to make the whole region, especially Dubai and the UAE, a very secure environment. But we're not ignorant to the fact that, there have been some cancellations of certain events, because is it right in the global environment, what's happening right now, to put on big celebrations? No, it's not. So it is being felt, but not from a sort of security breach point of view, but from a sort of attitude point of view. People are incredibly, emotional about it all, and rightly so. But look,
Well, I mean, I
like I
think
said,
one of the political reactions to all of this has been probably the Biden administration relieving sanctions on Venezuela, because the timing of that seems to be ties pretty close to all the volatility we've seen in the oil markets, and with the U.S. SPR at, I'm going to say, more normalized levels than it had been in the past. You've got to find other tools in the kit to help relieve oil prices. And so I think the releasing of sanctions, although temporarily, on Venezuela,
yeah,
is going to be in the pudding as to how these elections go over the next 6 months, has nevertheless put some, at least put a ceiling, I think, on prices at the moment. Venezuela is not going to rock the world, because you're basically going to take all those cargoes that were moving on the dark fleet, and they're now moving in the clean fleet, which has shown a massive spike in freight. We saw Suezmax rates jump from 4.2 million ARA to Singapore to 6 million ARA to Singapore in the scope of 3 days. And Aframax rates have done the exact same thing, because Venezuela, that's going to be large cargoes either going to the east or going up into the north, into the U.S. Gulf Coast. And with the way things are right now, I would suspect a lot of those cargoes are probably initially, once they start pumping out, will go to the east so they can match the refining schedule of landing sometime in late December, early January, versus trying to go north, where they'll have a hard time feathering into whatever the refineries have bought.
Yeah, look, it was a situation where it's like some kind of delta that the US government put in place, threats of supply. Okay, let's open up other avenues. I mean, the big question that the market's kind of got is, are they able to just suddenly increase production? And have they got the infrastructure? Have they got, that's the issue. Also, if there is lots of oil around the globe on a dark fleet, and suddenly that is allowed to be bought by the market, what release are we talking there? Is that another 20 million barrels, 30 million barrels? You'll have to get in touch with your favorite Kepler colleague to find out there. No, we're looking at it right now, actually. But, there's lots of questions. I think he was probably towards the more naive part of the market. Like, suddenly if Venezuela are allowed to export all this material again, okay, fine. From a political point of view, that makes sense. Next year, obviously, we come up to election year. Energy policy is highly important. But what does it actually mean in the global balance, the global energy balance?
I think when you look at it from global energy balance, it's unchanged, right? It hasn't really changed. Yeah. You might see an incremental 100 to 200,000 barrels out of Venezuela. You might. I'm putting a big caveat on that, because again, the extent of infrastructure utilization or the ability of infrastructure to move and process out Venezuelan crude oil is a question mark. How much has been scavenged? How much is damaged? How much is actually serviceable at this point in time?
Yeah.
I think the other question is how much is sitting on floating storage in Maracaibo Bay? Venezuela, PDVSA is an owner of a fairly large fleet. They're older tankers, just like NOIC, and therefore it depends on how many of those barrels get released into the market, which I would think that's their ready export. And then it depends on how much more they can ramp up from that point forward. I mean, I've seen analysis anywhere between exports going to 600 to 100,000 barrels a day of crude over the next 3 months.
Well, I'm just
sorry,
looking
600 to a million barrels of crude, not 100,000, 600 to a million barrels, which that could be that they're already exporting 600,000 a day, yet it's not really tracked because it's on the dark fleet.
Yeah.
So it now becomes visible to the commercial market. But that is not new oil. It's just oil that's now trackable.
Well, I mean, look, since, Venezuela was boxed, you're talking around an average over the last 3 years, let's say since September 2020, of about 750,000 barrels a day of exports, right?
Yeah.
But if you take that to where we were in 2016, it was around 2.5 million barrels a day.
Yes.
Now, the system there is aging. It needs investment. How much does it need? How quickly will that happen? I mean, our crude guys are having a look at it right now, but I think you're right. If it's a 10, 15, 20% jump on exports from where they are right now, I would say that's probably achievable, but it doesn't do anything to the global balance. No. In essence.
All it does is, again, as we've looked at markets that have gone through so many shifts here in the last 2 years with the Russian war, and now we've got these new variables being thrown in. I mean, if Venezuelan oil becomes more commercially acceptable or commercially tradable, which it seems to have become, because as soon as those sanctions were lifted, I think pretty much every trade shop in the world was knocking on the door of PDVSA saying, "Hey, we can help you lift a cargo. Please give us a cargo." Because the one thing that the world's been missing has been the heavy sour crude barrel.
Yeah.
And so now you've got this new source of heavy sour crude that is usable in the European refining system, in the US refining system, that's been missing from those refining systems, not so much in the US because Mexico has been exporting, so has Canada, so they've always had a nice source of heavy sour crudes to fill out the CDUs, but Europe has been the one place where heavy sour crude has been missing. And so if the Venezuelan crude starts going into Europe, which would basically proxy that for Urals, the natural reaction, and we've seen this already happen in the market, is high sulfur fuel cracks collapse, high sulfur spreads collapse, and you've got a 380 east-west that went from negative to positive.
Yeah. Yeah, I mean, it's funny you say that because my colleague just wrote an excellent piece about Middle East fuel oil exports surged into a record high in October, about 1.7 million barrels a day. Look, the high sulfur story is one that we've been discussing for a while. Demand, essentially, from a bunkering point of view, high sulfur is pivoting more towards there should be an increase because more and more boats are coming out, with alternative ways to get rid of sulfur, so the scrubbers, etc., and that will change eventually when the carbon argument is brought into the shipping community, which it is. I know you've got some bits on that about container ships, but I don't know. The market here is been fuel oil margins in the trading community within the Middle East have been dramatic this year, right? Dramatic moves. What we've seen, and we've spoken about it on the poddy before. The Al Zour refinery has shifted balances within Fujairah, being the Middle East bunkering hub, dramatically since the start of the year. But we haven't seen, we as Kepler, we haven't seen an export of VLSFO apart from the government to government with Qatar since the start of October, even before that. And it looks like there's not a lot more coming in now. So we're talking about high sulfur here now, but fuel oil balances in general seem to be a little chaotic in the Middle East right now.
Well, I mean, you can say that export for October is basically the end of summer. Utility demand in the Middle East drops off a cliff as the temperatures start to moderate in the Middle East. you start getting into your more cooler fall, winter weather. And yeah, you don't need all the utility demand for air conditioning and for power as you had before. So that does prompt the destocking activity, which is probably what you saw in October with the loadouts. It's just
Yeah.
a destocking activity. When you look at the Al Zor refinery issue, I mean, Al Zor was exporting close to 600,000 tons a month of VLSFO. That's gone to zero.
Yeah.
Yet KPC has now been exporting high sulfur fuel cargoes on a more regular basis. Now, when you know, I'm going to throw a speculation card out there. My speculation is that there's probably been an issue with a hydrotreating unit of some type within the Kuwaiti refining system, and that's forced them to keep the majority of the Al Zor VLSFO on hand for their clean fuel utility project, and they're exporting what they can't process through whatever other systems they have into the outright market, which is higher sulfur crude, because Kuwaiti export crude and Kuwaiti crudes in general are heavy sours. And so you do end up with more high sulfur barrels being thrown into the market than was there before, just adding more pressure. You throw on top of that, keeping kind of a Middle East focus, you've got the Russian refining sector coming out of turnaround, which means we should start seeing an increase in fuel oil exports and gas oil exports from this point going forward.
Yeah, less crude, a bit more disti, and some fuel oils. Gas oil cracks have held up okay recently. I think it's probably waiting to see what happens, because Russian exports have stagnated for October, excuse me. But we should see an uptick in exports for November, and diesel and crude flows out of Russia. We wrote about it yesterday. On the fuel oil side as well, Middle East, we've seen Ruwais. There's been the big refinery ADNOC. There's been 3 cargoes a straight run that have come out recently, and going, we've got one going to Brazil. There's one going to Europe. It's there's not a sort of consistent pattern. Whereas before there was a lot that was going east, but I think that with the more refining capacity you've got here now, I think it's more a global arb than just one people are looking at going east.
Yeah, well, I think so. I mean, that's why you have an east-west, which is close to zero. Okay, granted, it's positive, and it's been negative for the last 4 months. It's switched back to the positive side, +4, +5.
Wow.
US dollars met ton, which is not an open arb, still a closed arb, but it just shows you that the balances have shifted enough where the Far East is more balanced for more oversupply than necessary.
Yeah.
I think
that was always a sort of, the average, I would see as average, I don't know, between 25 and 35, something like that on the east-west high sulfur.
That was pre-IMO 2020. That was pre-point changeover. Because, the big pull was always the bunker demand in Singapore, which back in 2019 was 4.2 million barrels of 4.2 million tons a month of high sulfur fuel. Yeah. And now it's roughly 1.1 to 1.2 million tons a month of high sulfur fuel, with the balance being VLSFO and other fuels coming into the mix. So, you do still have that bunker demand there, but that bunker demand is pretty much satisfied with local production. So there's not necessarily, and when I mean local production, I mean east of Suez production. It's not really necessarily produced anywhere else.
Something that's just flashed up, because it's obviously important for the region. Preliminary data shows, this is a Bloomberg article, preliminary data shows that Saudi Arabia's economy shrunk by 4.5% in Q3.
Yes.
With the kingdom cutting oil production to push up prices, but that's the detriment of income, because it's not going up linear enough vis-a-vis the cuts versus the increase in prices to offset that revenue diff. I don't know, sorry, I know we're kind of, just while we're on the prism of the Middle East, do you think that sways OPEC decisions at the start of this, that are coming up, and say late early day?
It might put pressure on OPEC. If you take that into the broader context of global economy, Chinese PMI data that came out today showed manufacturing again contracting.
Yeah.
After the 1 month rally, it's now gone back to negative, and the service sector dropped again, now back closer to 50, which is contraction.
Yeah, it was 49.5, and it was, so which anything below obviously 50 signals contraction. Forecast 50.2. Look,
And the prior month to that, it was 50.2 was the prior month and 51.7 for services for non-manufacturing services.
Yeah.
That's
Yeah.
down to 50.6. So it's not moving in the direction you wanted to see if you were expecting robust growth and robust demand profile.
Okay, look, I mean, just before I go, I don't put you on the spot about what Saudis may do. Does the economic data put pressure on them vis-a-vis OPEC decisions? And I don't think it will, but I'll talk to you. But I would have thought with macroeconomic sentiment, as it has been the last couple of weeks, because equities has had a rout. What was it? 10% down in the last month,
Yep.
which is signals it is in a correction phase.
Yep.
But I would have thought with the market looking more and more at the negative data and Chinese PMIs being in contraction now, lower than forecast, that we would have seen Brent come off.
Well, it is the end of the month, number one. Number two, you still have the geopolitical risk, which keeps it supported. And granted, we're not at the robust part of the day. It's only 8:30 in the morning here in Europe, so most traders haven't even had their cup of coffee or their cup of tea yet to really evaluate what's going on in the marketplace. So there's still a few things to happen. And then on top of that, you have also the FOMC meeting, which kicks off today.
Yeah.
So you have a lot more other macroeconomic issues that are going to be out there.
So you're saying that China's not as important as it was?
No, I think China is important. It's just there's so many other things going on right now. The geopolitical risk is probably the trump card over everything.
Right.
Now,
So
to me, it's like, why can't we hold above 90 on crude? Because the general economic condition is not so good. Yet we can't get below 85 because the geopolitical risk makes it such.
Yeah, I mean this is it. This is a very good point actually, because if the headline had come out, so let's say Chinese PMI data versus the Fed, what they're going to do, and Jay Powell put rates up by 0.25% versus weak manufacturing data in PMI, the Fed wins that battle, that bearish battle, doesn't it?
Yeah. But I even think the weak PMI data wins a bearish battle. But with the other underlying geopolitical issues going on, you can't sell off the market.
Yeah. Yeah, and you're right. I mean, it is the old, wait for London to wake up story, isn't it?
Yeah, it is. And right now, I mean, as we said on the last podcast, referring back to, we keep referring back, but nevertheless, it was a case that, we said that you would see sell-offs Monday, Tuesday, potentially Wednesday, a flattening, and then a rally going to Thursday and Friday. And we're going to keep a tight range until something breaks on the geopolitical front.
Yeah. I mean, I like going back because I'm a wistful bloke. Romance is not dead. No, but it's all about putting things into context, because it's very easy in oil markets to get lost with furore and what your mate's telling you, and to get swallowed up into what is happening at that very moment. But if you look at it, okay, October down 8%, but we've been in a range. What's the low been? The low has been 83.44, and the high has been 93.79, which we touched on last week. That's a fairly narrow range in what is a very volatile market. But if you were to look at it from where we were this time last year, where were we this time last year? 31st of October, what was going on? We were at $94.25, right? And we were in a market that was pricing in other conflicts. I mean, I'm laughing. It's funny, not funny, but the Russia-Ukraine, what was happening there? How would Europe get their diesel? How would Europe get their crude? Blah, blah, blah. And now we're like, what happens about Israel, Hamas? Russia is still going on, by the way, in terms of the conflict there, which no longer holds news value. Again, we've said that so many times on the podcast. So it's this one at the moment, isn't it? And I've been writing that in my daily commentary. Like, comment, subscribe on that as well, people. What is a headline worth? What is pricing in war risk? What does that mean? What is weak China PMI mean? This is what I mean, is I still think that the only real pivot is what happens with US interest rates. For the market to really boil it down to what it means in terms of clarity for a forward view, I think is US interest rates.
Well, and most people are betting right now that U.S. interest rates are going to be unchanged. So the federal FOMC is not going to raise any rates at all. They're going to keep it 0.25, which leaves them one more meeting if they're going to raise interest rates to do it for this year. Now, the
Just
one
in
thing,
time for Christmas.
yeah, just a Christmas gift for all you bond traders out there. Now, the one thing about the whole U.S. Interest rates is that not only do you have the FOMC results tomorrow, but you also have Treasury selling U.S. debt, a large quarterly sale, around $770 billion in debt. That's 770 billion, which will dictate where actual interest rates end up, because that's going to dictate the forward curve at some point, because these are 1 year, 5-year, 10-year tranches that are being sold, which will define the front end of the interest rate curve, which will then say, if Powell does nothing, yet people need higher interest rates to buy debt, you will see that will be the interest rate increase, not so much done by the FOMC, but actually done by the market participants.
Yeah. It's funny because, go on, mate. Sorry, go on.
And we've had the 10-year U.S. bond yields sitting right around 5% now for the better part of 3 weeks. I mean, 4.9 touching over 5, back to 4.9, 4.8, back to 5. And you've also had the 2-year, 10-year price inversion coming all the way to 18 basis points, where a month ago that was closer to 80 basis points. So the price curve inversion is coming in, which tells you that the market is less sensitive to recessionary issues, but you are flattening out that yield curve at this 5% level.
Yeah. And look, it's I want to say my weird crush, not you, Edwards, but my weird crush is Christine Lagarde at the European Central Bank. I think she speaks very well. And what she said last week was highly important. If you're listening, Christine, like, comment, subscribe, and let us know if you want to be part of the podcast one day. We're open to all this. All right. We like economists as well, and central bankers. But what she said last week was until inflation is in check, because the ECB held interest rates steady last month, much expected. Until inflation is kept in check, I think their 2% target is not going to be hit until 2025. The only real tool they have and leverage they have are interest rates. And that is the only thing that they will look at using to bring things back into a zone that they're happy. If Jay Powell comes out in his speech, I think his minutes, whenever they are, his speech is going to be on Thursday. If he is that bullish, it's hawkish, let's say hawkish when it comes to interest rates, I really think you could see some big movements on bonds, and I think you could see some big movements on the back end of what it means for commodities as well. I don't think he will be that, I won't say dramatic, but that aggressive in his narrative. I think that he holds a lot back, actually. He's very measured. So I think that it's reading between the lines again, which are always key. But Lagarde was excellent what she said last week, and the European bond traders kind of went, all right, well, let's see what happens then, and keep your eyes on the data. And I think the US needs to do the same. Well,
the US has been keeping its eye on the data, and that's why I think there could be, the market could be in for a surprise. And the reason why I say that is that we had a very stellar GDP number out of the US. 4.9%, which was a surprise.
Q3. Well, it was for what? Q3.
Q3, yes. The initial reading at 4.8, which is a surprise to the upside, because prior to that release, you had transportation companies telling about how bad consumer demand has been, thus driving their earnings lower. Yet the 4.9% increase in GDP was primarily driven by consumer demand. So it tells you that maybe there is a point of destocking that has happened in the United States, where people have been selling out dead stock, moving out inventories, whatever, to go into the Christmas season, hopefully to buy good, cheap goods. But freight hasn't yet recovered yet to show that there is a restocking happening for Christmas yet.
Well, yeah, but you say, the bellwether when it comes to that as the world's biggest retailer or biggest marketplace, a platform essentially is what it is Amazon, obviously, and their numbers last week were excellent.
Yeah, Amazon is digital. Walmart, Target.
Yeah, but Do
Freaking
people go to the shop anymore?
yes.
I mean, changing habits do change. It's like my wife. I said to her, "We got to get the kids some Crocs, right? Other brands are available." So I'm not getting them. I'm not putting those frightful thing on my children. I can't stand Crocs. Now I can't walk out of my front door, into my front door without tripping over a pair of Crocs, because buying habits have completely changed. Is the bellwether Walmart anymore, or is it Amazon? I think it's now Amazon.
No, I disagree. I would say it's still Walmart is still
Oh, you old
the
dinosaur.
target just because it is what it is, and a lot of people shop in Walmart because that's what they do. Amazon is there, but it's not anywhere near what it used to be.
Someone get the man a pipe and a clay pipe and bring on the serving wenches.
Remember, we're all whale oil salesmen right now, so come on.
Yeah, exactly. Russ T-Rex Edwards. Anyway, sorry. Yeah, go ahead. Yeah.
But nevertheless, I mean, so we'll see. Freight rates, as a reflection of that, container rates have not been spiking at all. They've been maintaining their kind of on the floor level. Tanker rates got a really big boost on the Venezuelan story, mainly in the Aframax and Suezmax sector. MRs have actually been doing fairly strong as well. But I think that's more TD4 or TC14, TC7 routes that are doing very well as people are shuffling barrels around for the winter stocking.
Yeah.
I mean, the one surprising thing is, nat gas storage in Europe is still very high, which is understandable because we've had a very warm October. I mean, I think this was the warmest October or second warmest October on record for Europe.
Yeah, don't tell Greta. But is she out of police custody now? Yeah.
Free Greta.
Free Greta. Yeah. No comment. If she's watching, she won't be. Yeah.
You never know.
Well,
I always thought she was your secondary crush, not Christine.
Look, I don't want to get involved in this. This is a very, very dangerous place we're in. So just move on.
But nevertheless, so I mean, we'll see how things shake out in the wash. But I think, all eyes are going to be focused on the FOMC meeting and
yeah.
comes out of there. They said the market is pricing no rate increase, yet I think the bond sale is going to be the biggest direction of what the real sentiment is on the market around U.S. debt.
Yeah, I totally agree. I think that's going to move the needle quicker than anything. I mean, obviously, keep your eye on what's happening and escalation in conflicts. Intentions, I should say, not conflict, but just intentions.
Well, and as always, you're always someone that looks at the the global scope of things, and things that get drowned out because of what's going on in the Middle East. There was the massive earthquake in Afghanistan, which has kept a lot of people homeless and destroyed a lot of villages around the outer skirts. So please support your Red Cross, Red Crescent, or any other organization you have out there that is providing humanitarian aid to all the necessary places in the world that need it.
Yeah, absolutely. Completely agree.
And as we come to the end of this session, click, comment, like, and subscribe. Catch us on Spotify, catch us on YouTube. And we look forward to speaking to you all once again next week.
Yeah. Ciao.